Back from the brink, China-U.S. trade talks are on again after a 2-month hiatus. Presidents Xi Jinping and Donald Trump calling for a ceasefire in an acrimonious trade war. But will the fragile truce hold? Hello, I'm Anand Naidu, and this is The Heat. The talks are back on, but key sticking points still remain. The two sides are still divided on technology restrictions, alleged intellectual property theft, and agricultural tariffs. China wants tariffs lifted, but the U.S. says the levies will not be reduced. So what can we expect as China and the U.S. head into another round of negotiations? Well, to help us answer those questions, let's go to our panel. John Gong joins us from Beijing. He's an economics professor at the University of International Business and Economics. Anthony Chan joins us from New York. He is a former managing director and chief economist with Chase Bank. With us here in Washington is Jeff Moon, former assistant U.S. trade representative for China. Welcome to all of you to the show. John Gong, let me start with you. These trade talks have been going on for months right now. Several times we've heard that we were on the cusp of an agreement. Then we hear that the talks need to go on. What are the issues right now, in your view, that are holding up the talks?
Well, I think the issues are very clear based on the press talk at the when President Liu He, when Vice Premier Liu He was in Washington D.C. Before come back in the 11th round of negotiation, and also manifested very clearly in China's Ministry of Commerce white paper. There are 3 conditions on the table here, 3 issues. One is that all the tariffs will have to be removed, back to the same situation in July last year, before any tariffs are imposed by the Trump administration. And then second, China's commitment to purchasing American goods, especially agricultural products, the total amount needs to be reasonable based on China's perspective. And third, that the enforcement mechanism, as was being currently discussed, I think the most important issue currently right now, and as will be written in this trade agreement, that's a 150-page agreement, will have to be equal. Will have to be based on the same mutual respect of each other. It has to be balanced. In other words, it can't infringe upon China's sovereignty. These are the 3 sets of issues that, from China's perspective, that absolutely have to be based upon. Otherwise, there will be no agreement, in my opinion.
Jeff, listening to John Gong telling us there about those 3 issues or sticking points that remain, it would seem then that not much progress has been made.
I don't think there has been much progress made. From the American perspective, the issues are exactly the same as they've been articulated by President Trump and in the USTR complaint. And they are Chinese purchases of American goods, market openings, industrial policy reforms, and enforcement. And as a matter of fact, I think that we've taken a few steps back in the talks during the pause. I think that China has, for the first 11 rounds, China came to the table with the intention of trying to maintain the status quo, including the trade surplus that they enjoy. But I think that there was a decision in Beijing that Trump's demands were an existential threat. And the tone changed considerably, became much more defensive and hostile and nationalistic. And I think that that has put the Chinese side into a corner. It's going to be harder for them to find a compromise. And I think in addition, during that period, unfortunately, the U.S. Presidential election season started. And during any election season, nationalism plays very well, and it's going to make it more difficult for the president to make concessions that are going to need to be made in order to get to an agreement. So I think that the passage of time has not served us well.
Jeff, just looking at it again from the U.S. point of view, Chinese exports to the United States have dropped. United States exports to China have dropped. That must worry the United States.
I think this is a lose-lose proposition. Trade wars are not good, and they are not easy to win, to paraphrase the president. All of this is very unfortunate. We've learned many things through this trade war, that yes, there's been harm on both sides. We've learned also that decoupling is impossible. China depends on the U.S. for technology. The U.S. depends on things like rare earths from China. It is not possible for us to decouple in any way. So we need to take those lessons and recognize where we stand and come to an agreement.
All right, at this point, I'd like to welcome Yan Liang to the show. She joins us from Oregon. Yan Liang is Associate Professor of Economics at Willamette University. Yan Liang, great to have you with us. President Trump says he's prepared to hold off on tariffs. That's on $300 billion worth of goods from China. He made this promise at the G20 summit. In return, President Trump said China would increase purchases of U.S. farm produce. But on Thursday, President Trump, he tweeted this. In his tweet, he said, China is letting us down in that they have not been buying agricultural products from our great farmers that they said they would. Hopefully, they will start soon. They will start soon. What does this tell us about the negotiations? And is China using U.S. agricultural imports here as a bit of a bargaining chip?
Yes, that is astoundingly yes. I think this is another misstep in the trade negotiations between the two countries, and that reflected really the somehow seemingly irreconcilable mismatch in expectations. I think what Trump wanted from China is the purchase of farm goods in exchange for postponing the new tariffs, resuming the trade talks, and easing the Huawei ban. But for Beijing, they wanted a lot more. They want to remove all the punitive tariffs on China's imports. They want to remove Huawei from the NDT list. And so it seems that both sides have mismatched expectations. So that basically shows that the resumption of trade talks is not going to be smooth.
Anthony Chan, if we look at the risks for both sides in these trade negotiations, let's look at the U.S. side. U.S. farmers are being hard hit by this trade war. Looking at some figures that we just got, U.S. farmers' debt rose to $427 billion this year. That's the highest it's been in many years, since the 1980s. So how much of the talk that we're hearing from President Trump is actually talk aimed at appeasing this very important constituency for him?
Well, right now, that's not a real big issue for the U.S. president, because when you look at the polls in the farm community, the amount of support is over 70%. So right now, it is a risk to the farm community, because when you look at soybeans, whether you look at pork, in the latest week, according to the Agricultural Department, those orders are down in many cases anywhere from 75 to 97% from averages that we've seen in prior weeks. So clearly, the Chinese are not purchasing those products at the levels that the president had anticipated. But so far, the farm community has not protested in a serious manner, or in fact, loosened its support for the U.S. president. So that, I think, empowers the president to continue to not only have a combative stance, but certainly not cave in at this juncture. One thing I would point out is that there are risks for both sides. We know that as you look at the next set of GDP numbers that the Chinese are going to put out, it's going to be a real challenge to have growth in excess of 6% in the latest calendar quarter. And even in the United States, what we're seeing is that business sentiment is starting to weaken. We see capital spending is starting to weaken. In fact, the Federal Reserve has said very clearly that the major reason why they're even contemplating a potential Fed ease is because this trade uncertainty is having such a deleterious effect on business sentiment that they feel that they have to step in. So clearly there, as you heard before, there are no winners here. So both parties are, in fact, being negatively impacted by this lack of agreement.
And John Gong, if you look at the Chinese side of these negotiations and the risks for China, I mean, Chinese exports to the United States, as I pointed out, and U.S. imports into China have decreased, but the Chinese Customs Authority says what's happened has happened, but it's manageable. This is what they had to say. Let's watch this.
We should say that the trade friction between China and the United States has brought us some pressure. However, the impact is generally controllable. Despite the decline in bilateral trade between China and the United States, China's foreign trade overall, imports and exports, still maintains growth.
So what do you make of that, John? Is that optimism well placed?
Well, so far the loss of exports to the United States have been able to be picked up by increased exports to other regions, particularly in ASEAN countries, that's the Southeast Asian countries, as well as countries heavily involved in China's Belt and Road initiatives. I mean, look at the statistics of exports to these countries. They've been increasing rapidly, over 10% to double-digit growth over the past few months. So these are very significant numbers. However, having said that, I would still point out that exports to the United States is still a very large market. It represents the second. It used to represent the second largest exports market for China, and it's extremely important for many corporations, especially American companies operating in China and Chinese corporations working with these American companies in this very large global trade, global value chain network. And so this is also very significant to China. I don't think China wants to lose that market. And even though I think what the customs officials have been saying, so I think it still represents a lot of jobs and economic activities here in China. Now, also I want to add a note to the polls in the farming communities in the United States. I think these poll numbers have to be sort of taken with a grain of salt. Right now, I understand that American farmers are patriotic. They understand that they're currently being used as a spearhead for Donald Trump's trade negotiation with China. They understand that. They're willing to make a sacrifice of that, and I understand that. But I think these farmers will still have to rely on significantly exports to China, because China, realistically speaking, is still a very large market for American agricultural products. These farmers currently still support Donald Trump, but at the end of the day, they would expect that eventually there will be an agreement reached. If the United States loses China's export market for the agricultural products permanently, I don't think these farmers will still be with him. The farmers will not be the political base for Donald Trump anymore if they understand that eventually they're going to lose out permanently to China's exports market for their products. And as we all know, American agricultural communities represent a disproportionately powerful influence in Washington, D.C. So I think eventually, if there's no trade agreement, if there is indeed kind of an economic decoupling, especially in the agricultural sector, I don't think the farmers will be voting for him anymore.
Anthony Chen, what is your view on that? As you pointed out to us, support for Donald Trump from the farmers is still holding, but will there be a tipping point at some point when the pain becomes just a little bit too great?
Well, of course. I mean, Professor Gong is spot on. But at this juncture, when you're negotiating, I don't think anybody is considering that the Chinese trade between the U.S. And China is going to be breaking down forever. The question is whether or not you're allowed to posture for a month, 2 months, 3 months, or 6 months, and maybe even push it beyond the elections. That's what we're talking about. I don't think anybody in the United States or even in the farm community is even contemplating that there is a possibility that somehow we will never get a trade agreement. So I don't think that that's certainly something that is being considered here. But to the extent that U.S. economic growth slows down even further, we know that in the United States, both in the second and third quarter, we're probably going to see real GDP growth below 2%. We had 3.1% in the first quarter. Already that is giving at least some incentive for the president to actually negotiate. But the question is not whether he's contemplating never getting an agreement. The question is whether he has to give in and make concessions early in the game. Everybody knows that as the closer and closer you get to the election and we start to see these numbers really having a negative impact, that the concessions will have to be made. And even in China, everybody knows that if the economy slows down enough, the People's Bank of China will have to loosen the strings, perhaps add more liquidity, more infrastructure expenditures. So both sides have at least some levers that they can pull to sort of prolong these negotiations a little bit longer. But I don't think anybody is arguing that either side is talking about just walking away and never having an agreement. That I don't think is an issue, and I don't think that's on the table at all.
Jeff, there will be an agreement, but is there a risk that, let's say, the farm lobby in the United States could lose out permanently to other markets that China is buying stuff from?
Well, there is that possibility, but there's a finite amount of supply in the world. So I think that the farm product will find a market somewhere. As for how farmers are going to vote, one question or one thought that I would add to the discussion we've had so far is that if they cease to support Trump, who are they going to support? These are basically conservative peoples or groups. They are not suddenly going to support much more liberal Democrats if they do not have an ability to sell their products and become disenchanted with Trump. I think also that focusing on economically what's going to happen, say, this quarter or next quarter is a little bit short-sighted. I think the real important thing that is happening here is the supply chain shift. That is going to have a dramatic effect long-term for the American economy and also for the Chinese economy. Some of that shift, or a lot of that shift, has been going on because of the cost of producing goods has been increasing in China. But that is accelerating, and that is something that's not going to change back. There's one other long-term thing that really concerns me, and that is the extent to which this exterior issues outside of trade are going to infect the trade discussions and our ability to reach a deal. We've been very fortunate throughout the year or so of the first 11 rounds that there have been no exterior crises that have diverted attention away from the trade talks. But there are a lot of things happening in North Korea, Iran, Taiwan, Hong Kong. Any number of issues could displace these trade issues and supplant them and make it much more difficult to get an agreement because President Trump and President Xi have been linking other issues to these trade discussions, which I think is very unhelpful.
And Jeff, there has been some criticism of President Trump's policies coming from some very unlikely quarters. We just heard from Neil Bush. He is the son of former President H.W. Bush, and this is what he had to say. He said, quote, "China is not an economic enemy or existential national security threat to the United States. The demonization of China is being fueled by a rising nationalism in the U.S. that is manifested in anti-immigrant, anti-Chinese, pro-America first rhetoric."
Right. I think he was one of the 100 or so signatories to a letter along these lines that say we should not make China into an enemy, and I, of course, agree with that. I do have one criticism of that letter and that line of thought, and that is that the letter talked about we should not be too adversarial with China. If that means taking the Steve Bannon position, for example, that China is an enemy, I think that that's really inappropriate. But there is a new consensus in the United States that the China trade problem is a very serious problem, that China has not met its WTO commitments, and we need to be more forceful in pushing back. So I interpret Neil Bush's comments to say that far right wing should not be dominant in the United States, but I would suspect that he would agree that we do need to push back, and the core demands of this trade discussion need to be pushed forward.
Liang, if we look at the Chinese negotiating team, they've reshuffled their trade negotiating team. According to a report in the Washington Post, the Chinese Commerce Minister, Zhong Shan, who is regarded as a hardliner, has now assumed a prominent role in that negotiating team. What does that tell us?
Right. There are some signs that China is hardening up, toughening up its position in these trade talks. And I think that's for a number of reasons. For one, I think China has made some concessions in the past year and a half. If you look at China's actions, right, it has passed the new foreign investment law back in March this year, and it banned foreign forced technology transfer. And I know that Mr. Moon had some criticisms against that and said this is too vague. But again, this is a new law that replaced the old ones back in the 1980s. So I think that is a new, it's a breakthrough. And China also defended its exchange rates like Washington wants. And China also just recently announced the opening of the financial sector 1 year ahead of the schedule. So I think China has already made concessions that it can. And so now it's pushed a corner where it has no way to go but to toughen up. So I think by including this party hardliner, the Minister of Commerce, Zhong Shan, into the negotiation team, it shows Beijing is trying to toughen up in the negotiation. And I want to just add quickly on the point about China's export decline and so on and so forth. So I think, yes, China is sort of losing the trade battle in the sense that its net exports has contracted. Well, actually, the first few months of 2019 is still increasing its trade because companies are front loading. But in any case, even if China's trade has shrank, it has relied much less and less on trade to boost its GDP growth. It has relied on service sector improvements and domestic consumption increase. So I think it's not going to hurt China's broader economy to the extent that a lot of people may think. And also for this global supply chain shift, I think for one, we have to think about where these companies are going. They're going to Vietnam, they're going to Myanmar, but soon they're going to face the capacity constraint and bottlenecks in those countries and rising costs. And we also saw reports that some of the companies are actually returning back to China because of these constraints. And second, I think if you look at the data, China still welcomed $53.6 billion of inward foreign direct investment in the first 5 months in 2019, especially in high-tech and service sector. There's an increase by over 60% in the inward FDI. So I think it's too quick to say that companies are simply moving away, not to mention some of the market-oriented FDI may actually wanted to come to China to avoid the import tariffs.
Anthony Chen, what are your thoughts on the fact that the Chinese could be taking a hardline position in the negotiations? Does China feel it's holding a stronger hand right now? They could possibly think that President Trump is on the back foot right now, that he's coming under pressure not just from farmers, but from tech corporations in the United States as well. The United States has just eased restrictions on Huawei. U.S. companies can now export components to Huawei.
Well, when you say that we've eased restrictions on Huawei, that is true, but Huawei is still in the entity list. And so right now, what you're hearing out of Washington is they're going to be selling products to Huawei that the company can get from other sources. But things that really are crucial to 5G and things that are unique to U.S. technology, those products are still not going to be permitted for sale to Huawei. In terms of the capacity, that last comment is another good point, because the anecdotal evidence suggests that in countries like Vietnam, the capacity has already been met, which means that companies just can't run into Vietnam. But there is a lot of spillover. One of the things that really impressed me was looking at some of the growth numbers and statistics out of Singapore. You're starting to see that Singapore, which is a huge exporting country, is starting to show economic weakness. So you are starting to see spillover from this trade of impasse into other countries in Asia, and it's likely to cause some real problems moving forward. The good news, and the reason, to answer your question more pointedly, that the Chinese are taking a much harder line is because the Chinese are aware that the presidential elections are coming very close. They're just around the corner. And the closer we get to those presidential elections and we start to see economic growth in the United States slowing down and business sentiment moving lower, that puts undue pressure on the president, and the president may, in fact, start to consider making a lot more concessions than perhaps he has made so far. And that, I think, is something that will play an important role in the negotiations moving forward.
Jeff, so the president comes under pressure from the Chinese because we are approaching the election, as you pointed out earlier on. The other point is that he would want an agreement to take to the electorate before the election, wouldn't he?
He would want an agreement to take to the electorate if it's a good agreement. If it addresses the purchases, the market openings, industrial policy, enforcement. If it truly addresses all of those issues, yes, he would want an agreement. But if he has an agreement that falls short of those priorities, he has 20 Democrats waiting to scrutinize every word of that agreement and criticize him to no end. So that's why I feel that in the political season, we may lack political will on both sides, quite frankly, to get to an agreement, because I do not see so far on the Chinese side a willingness to make the steps that are necessary to remove the discriminatory measures that are in the Chinese economy and truly open the Chinese economy to foreigners. We have a lot of future tense, as in the financial system will be open in the future, but Americans are asking, how is it possible that the world's second largest economy with the 4 largest banks in the world cannot open its financial system, and even when the WTO says it must open its credit card system to American credit cards, not do so? Those are fundamental areas of unfairness that American voters will not allow Trump to not resolve before the election.
John Gong, what are your thoughts on that, the points that Jeff has just raised?
Well, first of all, regarding the financial markets opening up, it's going to be opened up in 5 months, actually. Premier Li said just at the Davos summer conference in Dalian that he will, as we all discussed this, update removed the opening up date originally from 2021 to 2020. So this is only 5 months away. So I think it's, in a sense, it's already happening now. Now, with respect to this the agreements about the, between the both sides about these structural issues, things like intellectual property protection, market access, industrial policy, SOEs, subsidies, state subsidies, stuff like that. My understanding is that there's actually very little disagreement right now into the 11th round of negotiation. In other words, the disagreement is mostly about enforcement mechanisms. The 3 points I mentioned, as Vice Premier Liu He said, the last issue is with respect to these enforcement mechanisms. In other words, reportedly, this negotiation is actually kept in very much secrecy. We don't know much about it, but at least from the leaked reports, the disagreement currently is not so much with respect to the substance of these structural issues as with respect to the enforcement mechanisms. Reportedly, Ambassador Reichheiser is very much emphasizing a legalistic approach. In other words, all these issues have to be addressed through legal means. They have timetables about these legislation efforts, and in a sense, this sort of infringes upon China's sovereignty. So in other words, my take on this is that probably Mr. Reichheiser is trained as a trade lawyer. He's coming from very much from American perspective, but China is different. And in the past, we know that these administrative orders, executive orders, essentially play the same role as legislations. So how much of it is attributed to Mr. Reichheiser's misunderstanding of China or lack of an understanding of China? I don't know yet, but I think at least we have a way to address these issues. Not, in other words, this dispute about infringing upon China's sovereignty versus addressing these issues in a legally binding way. I think there's a middle ground here.
Okay. Yan Liang, very quickly, we've just got a bit of time left. Do you expect there will be an agreement on trade before the end of this year, or is this going to drag on into next year?
I remain optimistic that something will be coming out from the trade talks by the end of this year. But again, I think both sides would have to recalculate what is on their table, what is their bargaining chips. I think for China, we'll look forward to the second quarter GDP growth, and we are also looking at whether or not the U.S. stock market is going to continue its momentum. So I think this will both affect both sides. And going back to John Gong's point, I think not only the enforcement mechanism is a tricky point, but also the state subsidies on technological development, that's another very thorny issue, because I think China considers that as a very important core national interest, and that matters for China to escape the middle income trap and also to upgrade its global supply chain position. So I think there are some still substantive issues on the table, but I remain cautiously optimistic.
Okay, we're going to have to leave it there. Thanks to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidoo in Washington, D.C. Thanks for being with us.